What's up, everybody? Welcome to the TinkerTribe podcast. I am your host, Greg Dowd. Welcome to the show. Tonight, I wanted to talk a little bit about cryptocurrency, maybe catch you guys up on a little bit of stuff that I've been doing lately. So, I guess not much to update. I've been doing the continuous workouts daily and just recently broke under 260 pounds. So staying consistent with my workouts and getting all that done. And been having on a lot of guests lately. I've been doing pretty good at bringing on the guests. And, sometimes it's just me doing the solo show. And tonight is one of those nights of going in solo. So what I wanted to talk about with you guys tonight is some of the reasons why you should hold some cryptocurrency and kind of talk a little bit about the differences between holding things like some Bitcoin, which I think everybody should hold some Bitcoin, and then some of the alternative cryptocurrencies like the privacy coins like Monero and how they can be useful. So, this is not financial advice. Do your own research and, never invest anything that you're not willing to lose. But, you know, when we look at the entire financial system as it stands, basically everything is running off of the basically everything is debt when it comes down to it. The notes that you use to pay for things, the Federal Reserve note that sits in your pocket, you call it the dollar. Basically, the way that the financial situation is now, I mean, they're adding trillions to the debt, and that number just keeps rising. So, I mean, you probably noticed that everything has been going up in price, and that's because the purchasing power that you have with those notes of debt from the Federal Reserve have been losing their purchasing power. And we recently, at our most recent Freedom Cell meeting, we had a guy come in and he did a really good presentation on an introduction to why you should not hold everything in the currency that is generated, these notes of debt by the Federal Reserve, and going into historically how we came to this point and the amount of new currency units being generated to pay for all the kinds of things that most of us don't like, I would say. All the wars, all the just needless handouts, and just all these things that just seem to be tearing everything apart in the world in a lot of humanity. A lot of it is controlled there by the printing of the money and the holding as the dollar as the reserve currency in the world, and a lot of that is completely funded by the Fed. And without access to such a incredible flow of money on the money printer go burr meme insert here, the there wouldn't be the ability to have all these wars and have all this just destruction on our planet. So what can we do about it? I mean, what can be done, and what can you do to at least hold some of your own cryptocurrencies and get into the game, as they say. So there are a lot of really good resources out there when you're going and looking into this information. One of the guys that I would probably start listening to as a suggestion is this guy Michael Saylor, and that's what I'm going to bring to you tonight is a kind of open with some this talk from Michael Saylor about why you should hold some Bitcoin, and then I want to talk to you guys about once you have some cryptocurrency that if you wish to participate in transactions, person to person transactions, why Monero or Pirate Chain or one of the privacy coin options, uh, using those two as an example, Monero I use, would be beneficial to you, and to accept these cryptos as uh, exchanging value with others. So the the biggest way that a lot of this stuff can end is if there it was at a certain point everyone just figures out that basically you're being taxed indirectly by them continuing to print all these currency units, and they're pretty much debt is what it is. It's a note of debt. It's backed by nothing other than the U.S. empire and its military power, control of the seas, things like that. That keep it in its position. But this has happened several times throughout history. Uh, in the United States, that the United States government has defaulted on their debts, and then a new system gets created. Uh, in most recent history, you had Nixon taking off the gold standard. I believe that happened in 1971. And then basically in order to fund the wars, like the wars continuing since that point, they needed unlimited power of the printing press. So you could basically call that a default in 1971. We're coming up on a point where there's going to be another default, and every time this happens, there is a reset, so to say, of the system and how it operates in a new unit of some kind. Uh, and my guess coming up next is going to be some type of central bank digital currency where that can be programmed, and they could do things like universal basic income or something like that. But you're gonna have to enter that system. It's all going to be voluntary, but you know basically you're going to be locking yourself into a cage if you're not ready for that, and looking and using alternatives right now, as well as getting yourself in. the best situation as you possibly can with your self-sufficiency if you don't want to participate in the oncoming new reset of the system into this, uh, basically after this default and entering into the new thing they got for you. So anyway, kind of gives you a little bit of an idea of why you should think about storing some of your wealth outside of the current system, because all the levers, all the mechanisms of that system are controlled, and at least you have an exit door at your disposal. All it takes is digging into it and spending the time to start to learn. So, part of that, I'd like to kind of help you along the way. And let's start off with this video here with Michael Saylor, and this one's titled "Why You Need to Own Just 0.1 Bitcoin." So, price of Bitcoin in dollars is currently at 41,000. Why that could be ridiculously more is if the dollar does go into some type of, I mean, it's basically on a crash course as it sits right now. All fiat currencies, um, fiat meaning by decree, I believe, that backed by nothing tangible, they all lose 100% of their value. So they go to zero, basically. Bitcoin is capped at a max supply of 21 million. If you own a sliver of that, think about all the people that are in the world. If you own a sliver of that 21 million, could put you in a good situation. And again, this is not financial advice. Do your own research on all this. But yeah, let me play some of this video for you guys. And we'll talk about it.
Now, right. And here are the three things. The halving is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, we know that fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. Right? At the end of the day, corporations only hold two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset, pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin. And then in the institutional investor side, you've got all these people holding real estate, holding commodities, holding gold, holding ETFs and S&P indexes and the like. And if they start to reallocate, and they will, 1%, then 2%, then 5%, then you're going to have something that's never happened in the history of the world, which is you've got an ETF on a commodity that is scarce.
There's so many major catalysts on the horizon for Bitcoin. The FASB accounting changes effective end of year 2024, the Bitcoin halving in April 17th, 2024, and the Bitcoin ETF final deadlines, which is also Q1 2024. All these positive catalysts, yet Bitcoin has been trading in a range between $25,000 and $30,000 for months now, which begs the question, with all these positive catalysts, who on earth is selling? In his latest interview, Michael Saylor believes he knows the answer. He argues that the majority of sellers at the moment are the Bitcoin miners. They can't just hodl their Bitcoin, they're businesses with bills they need to pay. They need to sell the Bitcoin they mine to pay for electricity, computer costs, and operating expenses. The good news, that selling pressure is going to be cut in half in just a few months from now. In fact, we even know the specific day, April 17th, 2024, the day of the Bitcoin halving. Make sure to stick around to the end of the video where Saylor breaks down his personal Bitcoin strategy for MicroStrategy and he lays out his prediction. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email.
15% a year, then we're scraping 14% positive real yield off of the debt. And so that would be 14% of $1 billion dollars or more, actually 14% of $2.2 billion. So that would be $300 million a year that accrues to the benefit of the common stock shareholders, you see. So let me make this.
You took advantage of the low interest rates when the low interest rates, I mean, in the low interest rate environment, you took, as you say, you took $1 billion worth it. At today, at rates, at yields where they are today, are you still as confident to take the bet?
Well, so this is the benefit of being an operating company. We can, every quarter, we can choose what to do. So some quarters we would issue junk bonds, other quarters we would issue convertible bonds, other quarters we would sell the equity. Other quarters, we would just use our own cash. So the answer is there's always going to be a good market and there's always going to be a bad market, right? There are things you shouldn't do and there are things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple that it should basically correlate 1-to-1 with Bitcoin after you pay the fee, then you buy a spot ETF. But if you wanted to actually try to outperform Bitcoin, like MicroStrategy's outperform Bitcoin, our performance over the course of the 3 years is higher than Bitcoin performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like for example, if our stock trades at a 30% premium to the underlying assets and we sell $1 billion of equity, we actually capture $300 million of accretion to our shareholders, you see.
So there's Michael Saylor with his expert insights into the future of Bitcoin. It indeed seems that we are on the cusp of something monumental with the FASB accounting changes and the much anticipated Bitcoin halving event. As the saying goes, the best time to plant a tree was 20 years ago, the second best time is now. Perhaps this applies to investing in Bitcoin too, considering the circumstances. Remember, if you wish to navigate these thrilling
strategy, you could think of as a levered long Bitcoin company that pays you a yield. Okay, so I'm not going to call us an ETF, but because we're not a financial company, but we have $4.4 billion plus of Bitcoin and $2 billion plus of debt. So what we've done is we've levered the balance sheet with debt that costs us about 1.5% interest.
Wow.
So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we could do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So we have $4.5 billion of Bitcoin, but we don't charge $45 million a year. And so the real idea here is, what if I created an investment vehicle that paid you a yield instead of charging you a fee? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it.
Insane.
So if you were if you
insane.
were pro Bitcoin, let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your asset. So, right. So if you have $1 billion invested and you're getting a 2% yield, right, you're actually picking up $20 million a year, right, instead of paying $10 million a year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee, and if I have cheap leverage, then the benefit accrues to the common stock shareholders, right? Because I went and I borrowed $2.2 billion at 1.5% interest, and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% a year?
Well, I really
Let's say
hope
it
so.
was.
I really hope so.
If it was 15% a year, then we're scraping 14% positive real yield off of the debt. And so that would be 14% of $1 billion dollars or more, actually 14% of $2.2 billion. So that would be $300 million a year that accrues to the benefit of the common stock shareholders, you see. So let me make this.
You took advantage of the low interest rates when the low interest rates, I mean, in the low interest rate environment, as you say, you took $1 billion worth at
All right. Well, that's kind of talking about what his company's doing, but basically, because of the halving event that's coming up, it's going to mean that the amount of new Bitcoin that are created is going to cut itself in half. That's happening in April 2024. And as the money printer continues to go burr, with the Federal Reserve creating new currency units, that having some cryptocurrency, like holding some Bitcoin, might not be such a bad idea. And so there's a bunch of different ways of getting your hands on some Bitcoin. There's a lot of different wallets out there. You need to understand that not your keys, not your crypto. If you are buying Bitcoin off of some exchange like Coinbase or Kraken or uh, some of these exchanges allow you to buy Bitcoin with your bank account or a debit card or something like that. That as soon as you buy it from them, you need to move it into your own wallet. And there's one that I use is Exodus, is the Exodus wallet, which is probably one of the better crypto wallets that I believe that's out there. You can get the wallet for your phone. You can get it for your laptop. Uh, it supports a ton of different coins. So this would be the first step, is to download a wallet like Exodus and to uh, purchase your first Bitcoin. Not a whole Bitcoin, but you know, get some what you can spare. And if you have any cash by the end of the month, after you've covered all your bases, and you got any like extra cash or whatever that you're gonna maybe put back into savings or whatever that you don't need access to at the moment, maybe think about putting that into some Bitcoin. Again, not financial advice. So, uh, but this is something that I truly believe may help you in the future. So, um, go check out the Exodus wallet. It's you can get it downloaded for your phone, or you can get it downloaded for your laptop, Android phone, and uh, Windows. I think it also works with Linux, I believe. Got a desktop wallet for your laptop. There is a built-in exchange in Exodus, but the fees are quite heavy that I've used before. They make it easy for you to swap using their wallet, like swap within the wallet, but you're gonna get pretty killed on the fees. So what I wanted to talk to you guys a little bit about is have some Bitcoin to kind of be your store of wealth, and then once you own some Bitcoin, you can do things like for like day-to-day transactions. Like if you wanted to do an Agorist transaction, then this is why I talk about using the privacy coins. So uh, so privacy coins is where you will uh, be able to spend like anonymous cash. Like so, just like you spend cash in your wallet, you don't want those transactions monitored. That this is the use case of privacy coins. So also earning cryptocurrency is another way of getting into cryptocurrency. If you don't have the cash to throw into it at the time, like you don't have that spare to start getting into crypto, then you should see if you can sell anything for cryptocurrency. And one of the great ways of being able to, um, start to enact this alternative economy and to get outside of the dollar as it's crashing is to do transactions whenever possible. Whenever somebody has something to sell and you have some of this private crypto, ask if you can pay them in something like Monero. And for people that are like hairstylists, like anybody that offers a service, landscaping, anybody that you are doing uh, things where you can accept cash as a payment, then this is another option where you can start earning cryptocurrency. So um, one way that you can get your hands on some of these privacy coins, because the main line exchanges where they ask for your information, it's called Know Your Customer, KYC, and then they have another acronym, AML, anti-money laundering. And those things are all about regulating the financials that you're dealing with. What's up, Joseph Martini? Hey, man, how's it going? You've been telling Kiefer and John to get some Bitcoin, but they think it's a scam. I get a little every check. Good deal, man. That's a good thing to have. What's up, man? Thanks for hanging out. Um, So yeah, I mean, Monero is a great way that you can keep your transactions private in the cryptocurrency realm, and then earn an asset that is a appreciating asset. So just like you would spend your cash, I guess you could kind of consider Bitcoin as you're being your own bank, and with the bank, except in this regard, okay. So the caveat on Bitcoin is that everyone can see all the wallets, where all the Bitcoin is, where it moved to. It's a completely transparent blockchain, and there are some tools that have been created, like I believe, like with the Lightning Network. I'm not as familiar with Lightning, but I do not understand that it's a protocol built on top of the Bitcoin blockchain that interacts with the main chain. And there are some tools with Lightning that help to make your transactions maybe somewhat more obfuscated. But but the the way that these privacy coins work is a totally different thing. Like they're private by default. So um, you know, when we talk about exposures to privacy, that a lot of times it's the user that is the person that gives away their information. And the same way with making like a Bitcoin transaction, and that wallet address, since everything is can be viewed on that public ledger, and like you can see amounts of Bitcoin leaving wallets and going to other wallets. Um, so now it's possible to kind of track that person that is sending the Bitcoin from that wallet and kind of figure out who you are, uh, by who you're changing wallets with, and things like that. Where all that stuff's going. So that is a way that can be figured out. So Monero is a different story. It uses something um, where it kind of like mixes up everybody's transactions into like a pool, and then it makes it a lot more difficult to figure out wh- which is coming from which wallet, where it's going to. So it's got that built in by default, and so Monero is probably the one that has been around for the longest period of time, and it is one that is pretty simple to use. Uh, when you access the wallet in Monero, it takes a while for it to synchronize, because basically it has to take the time to uh, basically figure out like the entire uh, snapshot of all the transactions that have been occurring on the Monero chain. So it takes a little while to synchronize when you use Monero, and then every time you're going to open that wallet, that it needs a little bit of time to synchronize, and so uh, you're gonna like just using it for the first time, like after you send an amount to someone, like you do have kind of a waiting period between when you can send your next wallet transaction, because it has to have time to kind of catch up. So, but this is the use case for privacy coins. I was recently, well, not too long ago, I was at the Self Reliance Festival, and that question came up about cryptocurrencies, and I did get a laugh from the crowd when I told everybody that I was into the privacy coins. But this is the use case that I see for a lot of the privacy coins, whereas The Bitcoin network overall is completely public, and all those transactions can be tracked. So if you think about like how your bank account works now, like you wouldn't want to broadcast like the amount of money that you had in your bank account at all times. And so that's where these privacy coins can serve a purpose, in my opinion, is where Bitcoin is like your store of value, uh, your store of wealth, and then you can consider these privacy coins as a way to do day-to-day transactions in the cryptocurrency realm, and keep other people from being able to monitor those transactions. So as far as obtaining these privacy coins, because of the KYC AML stuff on the mainline exchanges, they have delisted Monero and other privacy coins. But one way that you can obtain these for now is to use this exchange TradeOgre, and it's just tradeogre.com, and it's a really simple thing. You could just create an account by creating an email address, a webmail, a new webmail account, and then tying that to a password, and then it's going to ask you to do two-factor authentication and use some type of authenticator app like Authy or Google Authenticator. And you're going to want to do that. You're going to want to create that two-factor authentication. And then you're going to be able to move uh, an amount of crypto into this exchange, and then be able to trade to be able to get your hands on some of these privacy coins. Otherwise, you can do peer-to-peer transactions like I was talking about, where if you have something to sell, you can make that an offer to someone, is that I accept Monero or Pirate Chain or Darrow or Epic Cash is another privacy coin. Um, there's like Firo is another one. Uh, there's a bunch of different options, but Monero is like kind of the mainline one, and integrates with a lot of different wallets, and also with hardware wallets, and so that's why I like Monero. Is one of the big reasons why I like Monero, and the use case of it as using it as a like you would cash to maintain privacy in transactions. Um, Whereas you know in Bitcoin, all those are monitored, and it kind of gives you it kind of gives you a little bit of an out as well, is that you can uh, you can take an out when somebody sees or that hey, this guy owns some Bitcoin or whatever, and then once it goes through the privacy coins, once you can trade it for some privacy coins, then kind of wipes your history with the Bitcoin, and maybe I lost it in a boating accident, something like that, got stolen. So um, something to consider. Like I said, none of this is financial advice, and to do your own research. But this is a place that you can get your hands on some. If you don't do a direct trade for it, uh, but the buying pairs you can buy with USDT, um, which is Tether, which is a cryptocurrency that's like a stable coin. Uh, not the best. You can also trade in Bitcoin for this on this exchange. There's a bunch of other markets in here. for other cryptos. Um, Trade Ogre is one of the ones that uh, supports a lot of the privacy coins, and so Darrow, this is a project that is like it's like Ethereum, but then it keeps your transactions hidden. So it's like a smart contracting platform that can do more privacy based like amounts of in the transactions, and uh, so yeah, it's a smart contracting platform where you can keep the amounts hidden in the contracts. So this is an interesting project. Um, but yeah, go do your own research and go dive into the projects and read about them before you take the leap into any of the alternatives. Um, like I said, in the realm of privacy coins and the way that goes, I like Monero and I use Monero. And then yeah, if you're new to cryptocurrency, I think it's a smart idea to have some Bitcoin. And you think about the total amount of Bitcoin that will ever be created. That number is 21 million, and however many people, what do we got? Like 6, 7. We got 7 billion, something, maybe 8 billion people on the planet. Out of all the people on the planet, you can own a little bit of that and just hold on to it. Um, when you get your wallet, and like I said before, if your cryptocurrency is on an exchange, it does not belong to you. It belongs to the exchange. And anything can happen with that exchange. Exchanges can go under at any point. You know, look at the whole FTX thing. Let that be a lesson to a lot of folks that don't hold custody of their own Bitcoin or other cryptocurrency assets. You want it in your own wallet that you have the access to your private keys, and your private keys can be unlocked by a 12-word phrase. Sometimes they're 24 words. You write those words down, you keep them in safe places, make multiple copies, and make sure that they're in a safe place. You lose those words, you lose your crypto. Um, something happens to your device that your wallet's on. The only way you're going to be able to recover that is by getting to another access point and downloading a new wallet, and then using the phrases that seed phrase to regenerate your account and your access to your private key. So keep that in mind when doing all this stuff with cryptocurrency. And if you're new to it, see if you can find somebody locally that can give you a hand with it. Um, you know, you can reach out to me. I have a Discord, that the TinkerTribe Discord. If you have questions about it, I can kind of help a beginner at least get your wallet and your seed phrases set up, and just do some basic stuff, and kind of hold your hand a little bit if you're totally new to this. Um, so yeah, I just wanted to give that out there to some folks. If you've been following me for a while, I've been big into the cryptocurrency space for quite a while, and that I got into it, and ever since, I haven't been doing a lot of study of it recently, but it has helped me out in the past. Just being able to have access to some of that cryptocurrency. Like a fool, uh, you know, in the early days was spending Bitcoin uh, quite frequently and doing exchanges with people. And if I had held on to that early amount, I would be in a much better position now than in the past there. But yeah, man, it's a good idea to have some, and to if you get some Bitcoin, a good idea to hold on to that and use it as a store of wealth. A lot of people say, okay, well, what if the internet goes down? If the internet goes down, we got a lot more things to worry about. Basically, our entire modern world operates on the internet, and that's why I do talk a lot about getting yourself in order as far as figuring out where you're going to get your food from, who you're going to trade to get your food. If you're not growing your own food, you have a local farmer that you can go and do some kind of exchange for them. You can do a work exchange. You can do something like that to get a relationship with somebody that's growing food near you, and you start growing some of your own food as well, and getting as resilient as you can coming into the years to come. And don't expect that anyone is coming to save you. You need to save yourself. There is no leader that's going to lead you to the promised land. You must save yourself. You must take the actions today. Do your own research and uh, set yourself up for a better future. So, with that, guys, that's about all I have for you tonight. I have had a bit of a week getting back into the swing of things. Well, I guess it's been about 2 weeks getting back into the swing of things, coming back from a vacation. But I am a little worn out, so I'm going to leave it there for tonight. Appreciate everybody. Thank you, Joe, for coming into the live chat there. And then everybody that is going to listen to the replay. I hope this could help somebody out and give you a little bit, maybe give you a little bit more information than you started with. Want to have lunch soon? Yeah, man, possibly. So that's where I'm going to end it tonight. And I will see you guys next week for another episode, and be working on getting a guest in for the podcast. So don't know who that will be yet, but I will be working on that. I've got several people in mind and just got to do some reaching out. So we'll catch you guys on the next one.